Is it better to be paid from a W-2 or a 1099? Let's do the math and find out. All right, as a W-2 employee, if you make $200,000 a year, you have a standard deduction of about $24,000 if you're married filing joint. That comes out to a taxable income of about $176,000. Your tax rate, that's typical from a federal standpoint at $176,000 of income, your effective tax rate is probably about 19%, which would generate about $33,000 of taxes. You also have payroll taxes associated with the $200,000 that you pay as the employee from an employee portion. That's about $10,000 per year, okay? That is a total tax of about $43,440. You also have personal expenses of about $100,000 a year on average. That gives you total cash at the end of the year about $56,560. Now, if we look at it from a 1099 standpoint, if we have income of $200,000 from a 1099, we have expenses of $75,000. We're actually able to take a large portion of these personal expenses and roll them up into this $75,000, okay? That leaves us with a net income of about $125,000. Our standard deduction, again, $24,000, which makes our taxable income $101,000, which is lower than our W-2, which also reduces our effective tax rate to about 15%. This generates about $15,150 in taxes. We're still going to have a smaller amount of payroll taxes. We have about $4,500 for payroll taxes, which gives our total tax of about $10,650. Now, if we have $25,000 of expenses because we rolled the other $75,000 up top, now we're left with $80,350 of cash at the end of the year. Clearly, the better choice here is the 1099 all day long. Make sure you talk to the qualified accountant or CPA to help you make sure you're structuring this correctly, because if you don't structure this right, you could actually be the opposite and be paying even more in taxes. So you want to make sure you structure it properly as you go through this process. Hit the plus, follow along for more tax tips.